again, God only knows what great things we could manage under such conditions. We're becoming incredibly technologically powerful. And what would it be what would it be like if we became equally wise? Well, that would really be something. God only knows what we could manage in the next 20 years or the next 100 years, you know? We're running at 40%, most of us, you know, because we're half in and half out. And it's not surprising because life is difficult. It's like, well, what if you were 90% in or 95% in or all in? Because you're all in anyways, right? It's a life and death game. No one gets out of this. Everyone dies. You might as well commit yourself. And you might as well commit yourself to the highest good that you can attain, because why not? It'll imbue your life with meaning. It's hard, the responsibility's there, but all the meaning's in the responsibility, and that'll make your life better. It'll make your family's life better, and it should make your culture better. Maybe it make the world better. It's like, that'll justify your damn miserable existence at 3 o'clock in the morning when you're wondering what the hell you're doing here. And that's a good thing, because there's going to be days when you're aching and tired and sore, and there's people in your family that are sick, and you're cynical and bitter, and you need a reason to get up, and you think, yeah, well, a little more heaven and a little less hell, maybe I can pull that off today and tomorrow and next week. And that's worth struggling forward for.
Hello and welcome here on my YouTube channel, A-Bit Hacks. I'm so excited today to talk to the founder of Maximus DAO and the developer of the DCA trading algorithm. Finally, a crypto trading algorithm that actually works. This is how I call the show today. And with no further ado, we will introduce Brian, the DipCatcher. How's it going, man?
Hey, how's it going? Thanks for having me on.
Of course, man. I was so excited when I saw you releasing the algorithm, the DipCatcher algorithm, how to catch those juicy dips in the bear market, a big opportunity for us Hexicans. And I wanted to know everything about it right away, especially when I tried to get it, didn't do it on the first day, and on the next day, the price ratcheted up on me. This is just a joke, obviously, but later on we will get into the game theory that you have been able to program in. And then at the end of the show, we also want to talk about Maximus DAO, because we have so many people all the time in the ecosystem, and sometimes they don't know about Maximus and the perpetuals and the awesome opportunity that is there. DipCatcher, before we start, introduce yourself, because again, we have so many new people. Who are you? Are you a Hexican day one? What is your journey? And then obviously talk about your team, the Maximus DAO.
Yeah, so I've been involved in Hex since, I guess, before it even launched. You know, long time Hexican. I am a software developer, and so I just like building stuff. I usually work on very early stage startups. And so I'm kind of in that world. And I've always just been trying to contribute however I can to the Hex ecosystem. So I've built a handful of different tools and products throughout the time. Kind of an early version of this DipCatcher thing was this DipCatcher email alert system that is powered by the new algorithm that we recently released. So that was back starting in like 2020. I built some other, websites and done a lot of analysis and beating the drum on Twitter. And so I've kind of, always been trying to contribute to Hex. And last year, probably my biggest contribution was creating Maximus DAO. And so we have a suite of these Hex stake pools that help you maximize your earnings while minimizing the gas fees. Or something like 99% gas fee savings for ending Hex stakes. So I'm always just trying to, build stuff that helps enhance the Hex investor experience. And I like to, be involved in the crazy world that is Hexico. So yeah, that's kind of what I'm all about.
Amazing. I see people already coming into the chat. I have put the tweet for you guys to retweet into the chat. And if you want to follow along with today's episode, all the links that you need to know about are in the video description down there. So definitely go and check them out. And just to give everybody a little bit of time to like and subscribe and, share the word, let's also talk a little bit about Hex in general before we dive into the dollar cost average trading algorithm. DipCatcher, what is your favorite part of the Hex game theory? Because for me, in the beginning, it was the staking, earn trustless yield. Later on, it became the 10,000x. I cannot deny it. I'm a moon boy. But nowadays, today, it really is the community. What is it for you?
Yeah, I mean, kind of all three of those things that you mentioned, just how diverse it is. It's like there's kind of something for everybody. There's very simple, just like staking strategies on one end. And then there's kind of this whole, like layer two, like hexagon layer twos, like some of the stuff we have with Maximus, the Hedron ecosystem. So there's kind of something for everyone. You can, based on, how much time you have and how much you really want to go get into the weeds, there's kind of something for everyone. So I really like that kind of like diversity that there is. But probably what I think is most valuable for the Hex ecosystem, and why I think we have such a strong competitive advantage, is that we have a really strong culture of knowledge sharing and like serious efforts for like grassroots community organizing. And with a lot of the stuff that you guys have done with like the in-person events, and I mean the YouTube channel, I mean you're really you really showcase that aspect of it, where we really have a culture of personal connection and knowledge sharing. And I think that's, really powerful. It's like it only got more active during a bear market. Everyone else that I know who thinks they're in crypto, like they were nowhere to be found all bear market. And, other than if you didn't look at the price, you'd think that there was no bear market over here. It's like it only got more exciting. It's like last year, the price went straight down all year, but we had Hedron coming out, Maximus DAO coming out, and some other things kind of, adjacent to the Hex world. And, people only became more passionate, and more people were becoming hexagons. And so I think that culture that we have it really helps power through the bear markets into the next cycle. So that's probably my favorite aspect of it.
Amazing. And why do you think that is, that the Hex community is so strong in producing content? Everybody in Hex does something. If it's Twitter, if it's YouTube, you are somebody who's programming algorithms. I'm a content creator. I'm always trying to encourage the people to go online and speak up for Hex. Why do you think it is such a strong aspect in the Hex community that everybody wants to do something?
I think probably the genesis of that culture, I think, really comes down to, if you look at Richard's activity online in the years leading up to Hex, he had his Telegram channels, he had his YouTube content, and he had his Twitter. And just putting himself out there and creating, valuable knowledge and sharing it. I think that culture just kind of kicked it off. And then I think that because of the gatekeeping around Hex, and because of the all the FUD that there was, and all the slander, I think it actually really, like, all the people that saw through all that stuff and really got to the meat of it. I think that there's something pretty special in that just mentality. And I think it actually attracted a really creative group of people. I mean, look around, like there's a lot of, from the people making music, from, the YouTubers and the content creators, like the developers, like myself and Alex and others. I mean, and other, like, people like all the time are coming out with these new sites to, look at Hex data in a different way. Like, I think there's this really creative spirit that kind of comes with that. And I think, maybe that comes from like Hex being generally misunderstood, and maybe, really creative people are okay with being misunderstood, and they look at things from a different angle. And that's what let those people, see the value in Hex. I think it just generally attracts a really creative group of people. And I think that's probably at the heart of it.
Well, we always say that Hex is an IQ test, right? Because everybody and their mother is saying that Hex is a scam, and only the people that are able to look beyond that, they are then ending up in Hex, basically, right? And I think because Hex is so gatekept everywhere, on no exchanges, on no coin listing sites, it is, I think, page 3 on CoinMarketCap, right? And that's why the Hexicans know if we want to have a success and onboard people, we have to do it ourselves. And oh boy, were we successful in the last 3 years. The staker class gets bigger and bigger. We did 10,000x even faster than Richard Hart said. He said Hex was designed to do it in 2.5 years. We did that in like 1.5 years. Just crazy what the Hexicans were able to do with all this pressure from the outside and no free marketing from the outside. And I think that's exactly the reason. But then it is obviously also because of people like you, really knowledgeable guys that provide tools like the DipCatcher algorithm that make it now possible for us to catch those juicy dips. So can you give us in layman's terms, this is really important because we have no corners here, watching in layman's terms, what is the DCA DipCatcher algorithm?
Yeah, so the DipCatcher algorithm is it's a plugin for this platform called TradingView. So when you look at the price charts of different cryptos and stocks, a lot of the time people use the TradingView platform just for those price charts. And so the DipCatcher algorithm, it's a plugin for the chart that it does some math on the price history, and it identifies ranges that are good buying opportunities. And it also gives you specific order targets. So if you were to buy, it would say, it gives you a price level that you could put your order in at. And so it helps avoid a lot of the noise. When you look at the chart, it's kind of, you don't, and especially if you're new, you really don't know what it all means, but it kind of boils down all of the craziness to, like, is it a good time to buy? Yes or no? And then if it is, what's a good level? And so it helps. It's really designed to help people who are implementing a dollar cost averaging strategy. So that's when, every week, every month, whatever your cadence is, you're just putting in, $100, $1,000, whatever it is in your own situation. And so what this helps you do is it helps you isolate when to make your purchases. And so it just really tries to help. It doesn't try to call the exact bottom of a price because that's pretty impossible to do, but the average of the buy signals ends up being around the bottom, 10 to 20% of that range, which is kind of really the best you can hope for. And so it's just a plugin for the chart on TradingView, and it's just a really, really helpful tool for knowing when is a good price to buy.
And you guys, it sounds really complicated right now, but in a couple of minutes, DipCatcher will share his screen and we will look at the algorithm, how it works. A lot of beautiful colors there. But before we do that, let's go to the algorithm it's first and how to purchase this. I heard you saying you were programming on this algorithm for years now. So what was the reason that you came up with that? And for how long did you develop that?
Yeah, so I started building the algorithm in about 2020. And it was because I wanted to create I was trying to figure out how to build a trading bot. And so I was just learning the programming language for making TradingView algorithms is called PineScript. And so I just started learning it. And so I was just building that. And then what I did was I plugged it into this email alert system where people could sign up, where they put in their email, and then it would do the analysis. And then if it was in a dip zone, it would send out an email. So I had like an email list, and so that was kind of like an early version of it. That was going on for like 2020. And then 2021, I mean, the hex price just went straight up. And so there really weren't many dips at all that it was sending out. So it didn't really send anything out for like a year. And then it started to again during this recent bear market. But so that was what it had been for years. And every so often I would just go in and measure how it performed. And then I would just update it over time. So over time, the math has gotten a lot better, and the way that it determines what qualifies as a dip, that's gotten a lot better. And then, and just generally I've worked on it over time just to make it a little more useful. And then, so I thought that it was finally, time to put it out into the world and let other people use it. And so I just, wanted to figure out a good way to, to give people access. And so that's kind of how it led to this thing. And in fashion, because I mean, I launched 8 shitcoins last year, like between all the pools and everything. Like, so, I love launching products through a contract. And so I was like, okay, well, why don't I, if my main audience is crypto native people who probably don't want to put their credit card number and name and address into a website, like I wouldn't want to do that. I was like, okay, let's go to where the people that I know that I reach already, what's a channel that they're comfortable purchasing things through. And so I just built this smart contract to issue access to it. And then, so the way it works is you mint your access pass just through the contract. And then when you mint your access pass, it mints you a buddy pass. And so the buddy pass is just a normal ERC20 token that you can either give away to a friend or you can sell it. And then anyone who has a buddy pass token, they can convert it into an access pass by burning the buddy pass. And so it's the reason why we did that was to make it like a revenue sharing system where like customers, it's like when you buy one, you get a copy that you can then sell. So it's kind of like what it equates to is like a 50% revenue sharing system.
I see many benefits. If I really have a buddy, now I can share the cost of this algorithm with my buddy, like this is also another opportunity here.
Yeah, exactly. Like, because it's really up to, you can do whatever you want with your DCA token. And because you burn it to mint it into an access pass, it actually has, and because the rate to mint it in the first place ratchets up over time as people are minting it, those buddy passes, they become pretty scarce over time. And when you burn it, it's like the supply can be reduced. And since there's like a finite amount of people that can join, it could become very scarce. And so some people have started minting those buddy passes in a pretty speculative way. Like someone minted 42 of them, which is crazy.
Wow. And then you can only sell the buddy pass, or can you also sell the the access itself?
No. So the access pass is non-transferable. And so it was going to be an NFT, but it's like I was going to have to program the NFT to be non-transferable. And so I was like, okay, let's simplify here. It just stores in the contract, it records what addresses have an access pass. So like if NFTs are like loosely related JPEGs, to something in a contract, it's like that picture you're showing on your screen is the loosely related photo that your, record in the smart contract is linked to. So it's like an NFT without the T, I guess. It's just a record in the contract for the access pass. But yeah, so those are non-transferable. But the buddy pass, that's like fully liquid.
In a second, we'll look into the algorithm. Let me ask you this question. After how many mints the price goes up here? I see it now, 0.05 Ethereum per every 200 mints. And that's the reason why it says 22 remaining for this price. After those 22, the price will go up 0.05. So not too crazy. But as mints come in, eventually in 1 or 2 years, we can see like a high price for that. And then there is this stickiness that you can sell the buddy pass anytime and speculate on that. I think that's great. Let's make a thought experiment here. Let's say all hexicans ever would always use the DipCatcher algorithm. What would that make to the chart? How would the chart be in the future of Hex when everybody uses the DipCatcher algorithm?
Yeah, so great question. So if a lot of people that are all focused on one type of asset are using that as a way to guide when they're placing their buy orders, it's like those DipCatcher limit order signals can all maybe turn into some type of price floor where there's like a bunch of orders going in that just like kind of march up with the price. And so, getting a lot of people focused on a, buy like a dollar cost average purchasing strategy, that's a lot of, demand that would take a lot of sellers to absorb. And so I think that if this is implemented by a lot of people, it can be a really strong ongoing purchasing, support that, really can unlock a lot of demand.
I have really not thought about the price floor that then could exist out of it if everybody is using it. I was thinking of, that crypto is always a wealth transfer from the impatient people to the patient people. And if all the hexagons would use this trading algorithm, they would not buy in a bull market, right? And so the money would really come into from the people that are FOMOing, and that would probably also sell really early. So it is just enhancing this wealth transfer from the impatient to the patient. That's how I saw it, at least.
Yeah, that's very, very true. But also, like, with so many people using it, it's like, okay, everyone knows, everyone puts in their order at like the target. And then some people are like, okay, I'm going to put my order a little higher. I'll put it a little higher. And then, so, if too many people are using this, then it's like that trade becomes pretty crowded. And so so that's part of why there's a little bit of scarcity baked in with like the ratcheting up of the price. And then if at any point in time, 30 days goes by without any new minting, it's closed out, and then the access passes plus the buddy passes are all of those. And so, at some point it may just, the minting just, once everyone who's going to get it has already got it, then it could become kind of scarce in that sense. So I think that was like the balance I tried to attain with it, with like, something that, because if 100% of everyone used it, it would not be useful anymore, but like enough people using it is like a sweet spot. And so, this
is obviously just a thought experiment, but can you say that again? When does the DCA pass stop to exist? When so many days nobody mints?
Yeah. So if 30 days goes by without any minting of the access pass, then no more access passes or buddy passes can be minted. And that's the fixed supply of the DCA token. And
wow.
Yeah. So, probably, maybe money was left on the table for that, but I wanted to make it so that, at some point people would be buying the DCA token, so like, that was, the main reason why it has that cutoff, for a little bit of the scarcity, but also, so at some point there is a market for, getting access to the algorithm by buying a DCA token from somebody who had minted it in the past. So, yeah.
All right. So I have my questions loaded here. If you guys in the chat have some questions for DipCatcher, put them in the chat and we will then answer them as well. And I think the people want to see some action. Let's see the DCA trading algorithm in action. Please share your screen and then we can maybe look at the performance of Hex and where it would have been a good time to buy. But actually, it goes both ways, right? You can dollar cost average in and you can dollar cost average out, as I understand.
Yeah, I can show that on the chart. So here's
give me a second here. We have one question from the chat, and I think that's pretty funny here. When dollar cost average liquidity pool?
So there already is a pool, and so far I was just looking at it. Where is it? So someone made a liquidity pool, and right now there is. I think the price in the pool is pretty close to the price in outside of the pool. And so far there have been like 3 or 4 trades made, like, as of in the last week. So not a lot of trading is going on because it's still a better deal just to mint in the contract. But at some point that may change.
Whenever it is possible to create a pool to make trades, people will do it. It's crazy that it happens so fast. I did not expect it. But people need liquidity in a pool so you can make trades on Uniswap just for the new people. So I will bring up your screen share here. And now we see the dollar cost average algorithm in action. So I see a lot of colors right now. Please go into detail a little bit for our viewers. How does everything work? Because my question is, how easy is it for non-technical traders to use the DipCatcher algorithm?
Yeah. So, so if you're like a non-technical person or like probably the basic level would be to mainly focus on the blue in the background. So here, why don't I do this? You can go to the settings and you click style. Let's just hide these. So let's focus on the really the secret sauce here. So it's really about where the background turns to blue. That's considered the buy zone or like the dip zone. So at any price really, when the chart is blue, just simply market buying is a totally good strategy. And so when it's in this blue zone, in addition to just a market buy being a good strategy, it gives you a target for a limit order. So that's if you want to put a bid below the current price and you're hoping price comes down and it fills. And so that's what these blue plus signs are, is the limit order target. And then it shows if it's been filled by, if a limit order has been filled, there's like a yellow dot that appears. And so that's really the like if you're to implement like say every week you're going to put $100 in, it like weeks that this is not blue, then maybe you just want to like just build up that USDC. So just sit in USDC, and then once it turns blue, then maybe you take like 20% of your USDC that you've built up, and then buy on when this turns blue. And then so you can just kind of average in, and if you're averaging in at times when the background is blue, when it's in the buy zone, you're gonna perform better than someone who had just bought at $100 like every day. And so it really helps you identify what is a really good dip to be buying. And it helps give you like a price level that if it hit that level, like you'll be in a really good spot. And so the algorithm was designed to be used on both the weekly chart or on the daily chart. And so here we'll zoom out so you can kind of see how it is. And so the longer the time frame, so on the weekly chart, it's less sensitive. So it requires much more aggressive dips to trigger the buy zone. But like on the daily chart, what it's really good at is it kind of finds these local bottoms. And so even just so if you had shorter time horizons, even just buying in these and then looking to sell at a time when it's higher than what you bought it at, that appears to be a pretty good way to use this, just with how it identifies these bottoms. And then it also, so even if you're dollar cost averaging, it's like compared to someone who is just dollar cost averaging like every day, even if you're on this daily chart, which is more, it triggers more often than that weekly chart, that you see where these orders are. It's like in these deep legs down, and then it kind of just marches down. So it's like you're averaging into the bottom of these kind of local dips. So like right here, right here, right here. And it just kind of, works its way down and rounds out the bottom of that range. And so your average price throughout all this time would be probably around like 4 to 5 cents, compared to if you DCA'd like the whole time, your average would be somewhere up here in like the 15-cent range. So buying when the background turns to blue, that is just you can know that you're going to be in the better half of all the people buying in that time, because you're waiting for it to get into these levels that when it's down there, it doesn't really stay down there. Like it has to kind of come up for air, and that's really what this algorithm is designed to identify, is times where it's like especially low.
Hex doesn't stay at those low prices for long. We see that all the time. After every dip, we get a new all-time high. At least this is how it was in the bull market. And now how I see it, every time the DipCatcher algorithm shows the blue zone, it really goes up then quite fast again, right? So somebody is saying, how can we find it? You will find the links that you need in the video description. Definitely follow Tanto Nomini on Twitter, and that's where you will then see dipcatcher.com, I believe, is the domain, right?
Yeah,
and that will also
pro.dipcatcher.com.
that will then lead to the DCA algorithm. Somebody else is saying, how do you DCA out again? Is it -1 at the beginning of the pair name or something like that flips the chart upside down?
Yeah, so you do 1 over. So 1 over hex USDC. There's a button right here.
Yeah.
So you can do that. And so funny, right now it would say to be selling. So this is actually a good example of what it looks like. So on the inverse chart, like imagine this was just like a normal buying chart. It says right here, like you see the limit order target. So right now, if you were to be doing on the daily chart on the inverse of the hex, it would qualify as a dip on the daily chart. Let's see on the weekly chart. Probably nowhere. Well, it is kind of close on the weekly chart. But so this is how it performed on the weekly chart. The last cycle. So, this is honestly what makes it's very easy to tell someone when to buy something that is timeless and great, but it's very difficult to tell someone when to sell something that is timeless and great, because because Hex just had such an explosive move to the upside. This level right here, when it first ever indicated, it would be in the dip zone on the inverse. So call that like the pump zone. That was, so 1 over 50. So that's like at the first time it hit like 2 cents. And so that's, but also it scaled out pretty well over this, the whole cycle up. So your average sell order would have been somewhere in maybe this, like, what's 1 over 7. So like 12-cent range, which, I mean, back when price was around 1.6 cents, having an average exit around 12 cents out would have been pretty good. So it's specifically only a buying indicator for assets that you want to dollar cost into and hold for the long term. But you can apply the same principle to that. And maybe let's look at a more like a chart like Bitcoin, something that didn't go up 50x in a year. Let's just look at this, and so let's see. Yeah.
But that's also a great thing, that the DCA trading algorithm is not only for Hex. Once you got it, you can use it for every asset there is, right?
Yeah. I mean, like, it's how I look at, because I've had that algorithm on my charts really forever. And so it's how I look at every single asset I look at in this way. I'm looking at, here, let's add these, because I like these, and we can talk about these. So what I described earlier was the basic use, where you're mainly focused on the buy zones and then the targets. But these you can add these bands, and they just kind of they are kind of a mesh up between a handful of different technical indicators that people use on their charts. It's like a combination of, it's like Bollinger Bands meets exponential moving averages meets average true range. And so the three of those together, they give you valuable information about just different levels around the current price. And so and the more you study these, you see how they can in some ways act like support. Like during a long bull market, you'll see these like green and yellow bands act like a support level that it bounces off of. But then in bear markets, you see it kind of act like a resistance. And then the orange and red bands, and then these purple and blue bands, those are like far out ranges that price has a chance of getting to, but would be considerably overpriced or underpriced based on the last 30 period data. So that's where it's kind of like Bollinger Bands, but it's not applied. When people usually look at Bollinger Bands on a chart, it's usually measured using the daily close, or the period close, which I don't really like because it doesn't really tell you, like knowing what the price was at 0 UTC every day, like that doesn't really tell you much, but knowing what it is of the period high and the period low, which is what everything in here is based on, it only looks at like the range. It's applied to the range that the price traded in on that day. And so these are applied to the period high and the period low. And so because it does that, it actually gives you really, it can be treated kind of like support and resistance gauges. And so that's really what the, so these bands are more just to kind of help you. So like say you were to buy, you can use these bands like where, you bought on the signal, but then if price was to stay above the orange or red lines for a while, maybe that's like a time to sell. And so they just kind of paint different ranges where these are like, would be considered low, like the low range. This is the mid range, and then this is the upper range. And price has a high chance of bouncing off. Like if it's above one of them, it has a high chance of bouncing off of it from above, or if it's below it, it may have a high chance of bouncing off of it from below. And so those can just be helpful in kind of mapping out the next couple of days or next couple of weeks in terms of where price has a chance of going.
So what I just realized is that actually to just get the dollar cost average trading algorithm is not enough. You also need to know a little bit about it, like watch a stream like this where you explain about it. Do you maybe also have a blog where people can read all of those things?
Yeah, so let me.
And some people are already asking questions about the Maximus DAO, about the perpetuals. We will talk about this a little bit later on. First, we will talk everything about the DCA algorithm. And then later, we will also talk about Maximus and the perpetuals and all the questions that you have. So if you have any questions, put them in the chat. I'm marking them right now so we don't forget them. And DipCatcher here is preparing the vlog or blog that he has prepared for us to read through to learn about the DCA algorithm.
It's a Twitter thread. Let me see. Let's see.
So you guys, I hope you get a lot of value out of this stream here, because this is really something that elevates the whole Hex ecosystem, because now we are getting better trading, better dollar cost averaging. And we have an amazing tool that helps us to find the right prices. So we are not the ones that are suffering from the wealth transfer from the unpatient people to the patient people. With this algorithm, you really have the confirmation to when to buy, when to sell, even though it is not perfect. I want to ask a question about this later on as well. And I guess the Twitter tweet is on your Twitter, but it's probably really hidden somewhere since you tweet so much, huh?
Scrolling down to it so I can, here we go. Copy link to tweet.
Hexhodl is saying, keep smashing the weights, but can't see the gains happening. Oh yeah, I'm really active in the gym lately. I'm thinking, if you're financially free, then you also have the obligation to smash the weights and just be healthy.
I've been trying to focus on my health too. A lot of outdoor activity, a lot of lifting, better eating.
So here you go, guys. In the chat, I've put the tweet of Brian of DipCatcher here of the thread that you have written about the dollar cost average algorithm, where we can read everything about it, and that's some great value that you provide there. So let's go on with your screen sharing here. I brought it up again. Let's go back to Hex again, because right now the Hex price is mooning. We are at 5 cents, back to 5 cents levels. I'm really, really happy to see the price up there. And I just had the stream with Axis Alive, and he told me everything about the market sentiment, about the Godwell, what he is doing, about the liquidity. There are crazy things going on right now. Really, really bullish for Hex. But your algorithm is saying that right now would be a good price to sell. It is overbought, basically, just because it doesn't know what is the market sentiment, right? So here you have to be a little bit cautious when using this.
Yeah, definitely, and that's one of the it's pointed out. Let me in that thread where it's like a lot of other things factor into the price. Like this is purely statistical analysis on the price chart. And that, certainly doesn't capture all of the, ecosystem development, the broader sentiment, kind of shifting macro cycles, like it's like what the crypto bear market's been going on for like a year and a half now. And, so just like it can't capture all of that other stuff. Like it's really only looking back 30 periods. So in this, but you can toggle the setting. You see where it says 30 neutral. You can toggle it to based on your own, like if you want it to be more conservative, and trigger less but lower, you can go there. If you want it to be more aggressive, so you can kind of cater it to your own outlook on the market. But yeah, I mean, a lot of things can impact that, and then that's part of why it's really like a buy side dollar cost averaging one, because it would suck real bad if the algorithm was telling you to sell on its first 200% move when there's like a 2000% move coming after it. So like the selling it's more like when the price is in those higher levels, it's more like you don't need to be in a rush to buy is really the way to frame it. It's not so much sell at these levels. It's more like if you're implementing this strategy, you don't need to be in a rush. You can, let it come to you.
Funny enough, you're saying the word you don't have to be in a rush, and let's really test this hypothesis of yours. Let's go back to the weekly chart that we have here, and there we basically have 3 blue zones. And now let me ask you this question. First of all, do you think the bottom is in Hex with the recent things that are going on?
I mean, it's always impossible to say, but I mean, at this point, anyone who wanted to sell below, like at these levels, has had like almost a year to do it. Price first broke down to below, 5 cents in May of 2022. So that's in like 3 months. So like you've had 9 months to sell, and so a lot of the people that were looking to sell at these levels they're already out. And there were a lot of the selling activity. You can link it back to a handful of addresses that still, even at these levels, were up like hundreds of X. So, the impact of the bear market it's different for everyone. For people that bought up here, they felt really bad, but the people who had a ton of Hex that they bought in early 2019 when price was down here, they're still up massively here, and it's still massive success. And so there was a lot of sellers that could tolerate those low prices. But by now it's all that Hex that was for sale is now in the hands of people whose perspective has been reset at these levels. It's like all that Hex that all those big whales were selling, their buy order was way down here. And so to them, they're up massively. Now these people that just bought that Hex off of them, their starting point is in this, 1.5 to 5 cent range. And so those people are now looking for higher targets before they, would be selling. And so that Hex went from active selling to people that are likely to hold it into the next cycle. So really good. I saw a lot of really good distribution of supply. And so, the tides, they do feel like they're kind of turning. And what's different about this here is that when you look at all of these just like downtrends, like in the, like from the highs, it's like, we went down and then it went back up, but then it was like immediately retraced. And then each additional pump was just like smaller and smaller. So, we saw this pump here and then the next one was smaller, but now this one is, equal in size to this sequence. And so it would be a bad sign if these like pumps were getting smaller and smaller, but the fact that it's, could be growing, and that makes me feel like there is a high chance that the bottom is in. But then again, all it takes is another wave of big sellers to go back down. So it's like, it's truly impossible to say, because you have to predict what the largest holders of liquid hex are going to do. And it's impossible to predict what they're going to do. But in terms of the market momentum, it's looking like this is a common sign of like a trend reversal, like, kind of like this triple bottom right here. What other memes can you draw on the chart? You can draw like a head and shoulder type of thing, where you have those, like, the shoulder, head, shoulder, and then kind of how we had up here.
I like how you framed it. What kind of meme can we draw on the chart? So technical analysis is not that serious for you, I guess?
Yeah, I mean, it's like the technical analysis. It's really for people framing their own perspective on the market, and the more people that like look at something and kind of align on it, then it kind of can become a self-fulfilling prophecy. And also it is an important way to just like measure and describe the rate of supply and demand changing, and so the meme aspect of it is more like, if a lot of people see a head and shoulders on the chart, they all may be like, okay, that's unfolding. And then the fact that all of them think that's going to happen and they all go long, that's like what makes it go up. And so, because the technical analysis, and much like the DipCatcher algorithm, like, it only looks at one component of the price, which is the price chart, and it can't really capture external things or future actions. And so, it really is, more of a, it's like a, it's more serious than what some people try to discredit it. I think people sometimes call it like astrology for men. But it's more serious than that, but it is also only one part of the whole unexplainable, unpredictable thing that is price discovery.
Well, the market is subjective because people are subjective, and the market consists of people. This is how I see it. So that's why it's always really hard to say. But if we look at those three areas in blue that we have here, it basically tells us how much time do we have to successfully dollar cost average into hex. And now this time is past. This was all in the past, what we are seeing here right now. And, from now on, from what I see in the market sentiment changing, the Godwell, providing a humongous amount of liquidity that maybe is the bottom, and we will not go under that. And just pull chain coming out. We have the Netflix documentary, and so on and so on. That might be now the case that the DipCatcher algorithm won't be showing blue areas for a long time now. What do you think?
Yeah, I mean, well, it's definitely, because price has gone up, however many percent that is in this last couple of weeks, based on this time frame, it's no longer in this dip zone. But all that means is that it's just, realistically, what will probably happen is in the next couple of weeks or next couple of months, maybe it goes up higher, but then whenever the next like natural retraces, maybe at some point the price goes down to a level, because as the price goes up, the threshold that would qualify as a dip goes up. It's like, so now it's like, for it to be considered a dip, price would kind of need to be back down, it'd be around, I can kind of eyeball when it would be based on the current level. Price would need to stay below the 3 cent level about in order to be classified as another dip. But if price was to go up even higher, and then these bands are going up higher, then the threshold that it needs to get to be a dip would be, lower. So maybe the next time it signals dip, like if the price was to do this, say the price was to go up to like, say 13 cents and then dip down to back to where we are now, that could be the next time that it signals buy on this chart. Even though it's at the same level that it's at now, it's based on the relative price compared to the last, in like my setting here, like the default is called 30 neutral. That's what I like. I think that's my sweet spot. But if you're using this, you can toggle it to different, if you want to make it more or less sensitive, or if like you think that, that like it gives you some flexibility to kind of toggle it to your own perspective. But, just based on this 30 period, where it's measured based on the previous 30 candles, so that means that these levels that qualify as a dip reset over time. And so if it went up, a while and then retraced, we had another sell-off, it could bring us back to the current level, but it could be in the dip zone because it would be based on the activity up here when it went higher. So, it's all, it can be catered to every person's perspective. Because say you're just getting started and you really want to get in, and you're okay with maybe paying even higher than it is now because just a couple months ago it was way up here. And so what you could do is you can just zoom in like somewhere, there, like if you go to the 4-hour chart,
and this is exactly what my next question would be. For somebody like me who doesn't do TA, who doesn't do trading charts and so on, but who wants to get into, because of Access a Live tool now, I'm pumped to learn all of this stuff. With your trading algorithm here, I have the perfect tool available to do all of this. And now, what is some advices that you can give to people that are new to trading, for example, or in this case, into dollar cost averaging in?
Yeah. So if you're just getting started and you're you want to get your initial position, just tuning this into like maybe the 4-hour chart, and maybe setting it to be a little bit more aggressive. So there's a setting here on the chart that says aggressive. So if you're like just getting started, and so tuning it into those settings where you just, so zoom in on the time and then make it more aggressive, that can be a good way to just start making your buy orders. Because, like if you're really worried about the train leaving the station, and considering that this is, a fairly, especially because it was designed for the daily and weekly charts, it is fairly conservative in terms of dips. Like during bull markets, it almost never goes off, even though there are times where the price dips, but it never reaches that threshold that it gets low enough to trigger. So if you're just getting started, and you really want to carve out your initial position, tuning this into like the 4-hour chart and then making it more aggressive, that can be a good way to just help you buy in a way that is just like a little bit less frustrating. Because like I know when I was getting started, it seemed like I would like be sitting on my toes, not knowing when to buy. And then once price was pumping, I'd be like, okay, I need to do it now. And I would buy, and then it would go down right away. Just like that, because it's just like kind of that natural, like, oh, once I buy, then it's going to go down. But like, so just using this on like on the 4-hour chart, where, the 4-hour chart, it goes off periodically, every couple of days or every couple of weeks, it'll go off. Like it goes off, fairly often, but it makes sure that you're not buying these peaks that have a high chance of like retracing immediately. And so if you're getting started and you just want to carve out your initial position, I would just zoom in and then make it a little more aggressive. And just for that. But if you're like moving larger amounts of money, and you can, maybe you already have, a lot of hex, and you're really looking to scale in when price is especially low, maybe you can change this outlook to be more conservative. And you see there, like, the difference with, like, just look at all the, when this is on the daily chart, on the conservative mode, it's, very rare that it triggers buy, but it really rounded out the bottom here when it got below 2 cents down to the 1.8 cent range. But so it's a lot less often, but if you turn it to like neutral, you see more, and then aggressive even more. So, if you're like already have a lot and you want to isolate your buys to like much lower prices, then toggling it to conservative can be a good option for you. But if you're just getting started and you really, you need to get your initial position, just making it a little bit more conservative can be a good first step.
Aggressive
More
in this
aggressive
case.
can be a good first step.
Yeah, and then when you have your position already, I would definitely go into the weekly chart, right? That's where it is like really conservative then. I think that's a really great strategy. Thanks for explaining that. I have a couple more questions here, but I think we will not get to them. I have also a couple of questions from the chat. So, let's try if we can break the DipCatcher trading algorithm. Obviously, you have only used them on good charts like Hex, on Puts Dogecoin, and so on and so on. But what happens if you use this algorithm on the Zen chart, for example? Because this should be like red, and let's see what it says.
So it doesn't have enough. So
actually, I was expecting a lot of blue because the chart is only going down.
It's funny. The numbers are too small to. I think, yeah. Let me see.
Yeah, maybe we have to tailor it a little bit so it's able to do something.
I think these. Okay, so here let's do something. Let's multiply it by like 100, just so we can get numbers that work. Or what this means is, why isn't it? You just broke the.
I told you we will break it. That this just means that you do not want to buy Zen at any cost. Try to avoid buying Zen whenever you can. Look into it maybe, but just learn. It's an educational token.
That was the chart was kind of broken. So when I went to a different pair, but still, so there's some with the very small numbers. I think it must be. That's weird, because I was looking at this the other day, and this chart, and let me see if it has actually performed decent on here. It doesn't really, because when it price like only goes down, it's like it's like the information it's referencing is like always low, and so it doesn't trigger that constantly, because like the price volatility has something to do with the but if it's volatile to the downside most of the time, it can do that. But let's zoom in on the maybe this will give us better. It kind of does catch these falling knives, I guess, but even on a chart like Zen, it isolates around, like, you're not buying any of these like sub-cycle pumps. It really is kind of rounding out there. So like, if you were to be buying Zen, at least do it on the DipCatcher signal.
It really is shows the proof that the DipCatcher signal is working. It doesn't make you chase the pumps. It rather makes you sit back and verify that this is now a dip. This is a good time to buy. This is how you should use it. And putting it on the Zen chart was just a joke, anyways. And now you want to bring it even further. Okay, let's see where this goes.
Here, this is a better example. This is old enough to remember that Hex clone?
Yeah.
Like, let's look at the weekly chart here. So this is a price that actually always just only goes down. And yeah, this can be like, if something only goes down, it's probably going to be triggering to buy, but like you have to have the discretion that if you're buying something that can only go down, the algorithm doesn't know that Wise has some issue with like their liquidity lock, where this is basically like a chart of their of the like supply inflation, how it just drains the pool immediately. So that's a good point, that on something that's just perma-rect, even if it says to buy, like the DipCatcher algorithm doesn't know that like this thing is just like broken and horrible. It's like it has a statistical equation that it follows, and things that go down forever would trigger that. But you have to first have the awareness to be applying it to things that you actually want to buy.
At the end, cryptocurrency puts all the responsibility in your hands. You really need to know what you're doing when you buy or when you sell. So that's really important to consider. The algorithm is actually just something that can help to verify your decisions that you are making. So Hex Huddle is saying, can you rewind and observe when the blue dip area is actually printing?
Yeah, you can. So I'll show you. I made a video on that. Which here, maybe this is here. I'll just play. I've recorded a video of it, and it's on my Twitter. So let me pull it up, and I'll share this screen, and we can show it, just because I have a nice video that showcases what he's describing.
Yeah, please
so
do.
That was
You guys in the chat, thanks for being here. I'm seeing that a lot of engagement is coming in, over 40 people watching. That's amazing. So don't forget to like and subscribe. In the video description, you need all the links that you need to follow through with this stream here. And guys, I have all your interesting questions marked, and I will then ask them DipCatcher after he is presenting the video that he wants to show. And then we want to also talk about Maximus DAO, about the perpetuals, really briefly, because I know we have a lot of new hexagons that don't know about these opportunities yet, and obviously we want to educate them on that. So I will bring up your screen share here, and this is the video that you have prepared for us?
Yeah. So this is on TradingView. You can like rewind it and let the price play out. And so this is what it looks like as like if you were to be watching this like in real time. This is on the weekly chart. So this is like the bear market from the DipCatcher.
That in the bear market with this DipCatcher algorithm, you would have really catch the best timings to buy, and this is going to be such an amazing tool for the hexagons to use in the future. But I'm a little bit afraid that now with the market sentiments, again, I just talked to Access Alive, and he painted such a bullish picture, and I just see that everything is coming together so beautifully. We might do not see a dip for a long time in Hex. At least this is my opinion.
Yeah, I mean, especially on this weekly chart, it like considering that when you look at it on the, I have it on my phone, but I can't find it. Or here, let me see if I can hex. If I go hex BTC, see, because yeah, for some reason I can't find it on. Oh yeah, here it is. Okay, so
Hex ESS is saying it triggered accurately on every coin I was actually interested in, and I think that's a really great feedback. Thanks for sharing that.
Yeah, that's it. Really is powerful on all markets. So this is wait. So this is the big. Let me see if that's. I need to divide by that rather. Nope. So maybe it's the other way around. So BTC USD divided by hex BTC. I'm trying to get like an all-time chart. Okay. I because the one that I look at, this is like from when Uniswap V2 started. So that was in 2020. And so, the first cycle, the price went from like almost zero up here. And on the weekly chart, and this doesn't show here because it needs 30 periods of data. So like the first time it starts, it could show would be right here. And so, but if you look at it on a chart that includes the other one, it triggered like once here and once here.
I don't have your screen share up yet.
Sorry.
No problem.
I was looking around for an all-time chart, but I couldn't find one. But when I have it on my phone, maybe I can share a screenshot later, but on the weekly chart using the default settings, it triggered once here at this like August 2020 low, and then once here right after big payday. And then it never triggered again until here. So it literally went like 2 full years without triggering on the weekly chart. So like from this one, like the weekly chart is really kind of like, these are like potentially like generational bottoms that can go years without signaling. But on the daily chart, it absolutely could come back to, like, that wouldn't even be shocking if price came back down to the level that it would probably start triggering would be if price stayed below 3 cents for a couple days. And like, that's not out of the picture at all in like the short term, like that could be like normal kind of cycle activity on that daily chart, but on like, say, the 4-hour chart, price really would need to stay below maybe like 4.5 cents, which absolutely could happen. So like, the weekly chart, which shows those like long-term, like potentially generational bottoms, if this is the bottom, then, this weekly DipCatcher alert, may take some time, but, on the daily chart, you may see more activity sooner. So.
And I always worry for the people that are new to Hex because, I had the experience that I was able to dollar cost average into Hex for like over a year. It was a great time to buy. And now the DipCatcher algorithm also showed that the last year was a great time to buy, but this time is coming to an end. The bear market lasts over 1 year now. The market sentiment is changing. I have to say it again and again and again. If you have no Hex secured yet, if you just get into, I would start with the dollar cost average algorithm here, and then I would definitely put it into daily, or maybe in the 4-hour, put it to aggressive, because there's not much time left to accumulate cheap Hex. At least this is my opinion.
Yeah, I agree. Like with that's an important distinction to make. Like, you don't want to be left on the sidelines. Like, it's way worse for you to sit there wanting to buy, but then you don't, and then watching price go up. Like, that's like, especially for a new user, that's way worse than buying and then the price going, continuing to go down. And like, because like, even if you were to, like, even though right now price isn't triggering, buy, when you zoom in on like the daily chart, it's like, if you rewind back like a year and a half, when price was at like 15 cents, that was considered a relative low, because like when this is the chart, like when that's all you're looking at here, like when price was at 15 cents, that looks like a juicy dip, because price was above that for months. And so, and that's like, with the algorithm, it's more like a relative dip to like the recent history. And so, one way to kind of, if you, are kind of worried, you can kind of rationalize it yourself as like, okay, well, at the exact same price that it is now, that was, it was triggering buy at this level, in May of 2022. So almost a year ago at the same price, it was triggering buy because at that time, price was above this, like this was a big breakdown. And so that's why it triggers the buy zone. But then like, as it stays in this lower area, it recalibrates what is considered low. And that's why it kind of just like ratchets down. It's like, it might have a wave of buys into these big sell-offs. And then like the next time it starts like near the bottom of the previous little wave, like this wave right here, and then this wave, and then this wave, then this wave, and then this was like the final wave we saw. So, one way to just rationalize it is that like at one point, that like this same price level was considered like a very aggressive dip, but then as like, the bear market continued to unfold, the price did go down, but it still is a relatively low price to buy at. And maybe one way to look at that would be let's look at the monthly chart here. So it's not in the, like, it really never got to the dip zone on the monthly chart. It even, like it never had.
Even though we had a 96% dip, this is crazy.
Yeah, like on that. So it would have, I can tell because I can kind of have I have kind of a sense for, just because I know how the equation works. If this candle would have been red, it probably would have started triggering. But also like on the, let's turn it to the aggressive setting here. So like aggressive on the monthly, it's actually still in like the buy zone. It has the limit order way down here, but the anytime it's blue, like even a market order is pretty good. And I can tell that next month, so at the end of this month, it'll stop triggering. I can already tell it's broken the like rule for what happens on a candle that makes it no longer. So after this month, we will no longer be in the dip zone. But on the monthly, on the aggressive setting, it is in the blue here. So it can be.
But like I said, with all those things that I know of, I think it makes totally sense to still be in the blue zone where you want to accumulate now before the price is 7 cents, 10 cents, 21 cents, or something like this. Okay, so we talked a lot about the DCA algorithm. I have 2 more questions about that, and then we will pivot to Maximus DAO and the perpetual. So Rick E is saying, can it send us a text if we do not know how to use the platform yet? So in the past, it was an email newsletter that was sent out whenever the algorithm hit. Can the people still do that?
So I turned off the email alert system. It was like a big pain in the butt to operate. And so I turned that off, and that's kind of what this is replaced it with. But once you have this, you can go to these alerts, just like there's an alert button right here on TradingView, and then you can click create alert, and then you choose DipCatcher algorithm. So here, whatever the setting is on the chart is like what it is, like that'll trigger this thing. And so I'm saying once per bar. So every time this triggers, it'll do that. And you can set a notification to email you, or you can have it send an email like to your phone number, or you can have it notify you on the app. And so you can set these alerts here, and the text that shows up here, this was actually like it remains from when this was powering the email system. So this is like Python. But so if you just leave this as is, this gives you like basically all the numbers of all the lines and all the limit order and all that. So you can just leave this as is, and then that'll give you a bunch of information that you can, look at and use on your own, or you can like write your own custom like message that you want your alert to be. So you can create alerts there. But I probably won't be hosting a alert like SMS or email system. This is kind of the new thing.
But it's still cool that you're able to do that with TradingView, to just simulate that. So next question from Red Bull Green Bar. Another question for DipCatcher. Would you still recommend using limit orders to buy in conjunction with the DC algo? Do you think liquidity providing or limit orders is the best way to offload gains?
So, I mean, it definitely depends. The limit orders are from my experience, the highest performing times I've ever bought were market orders. It's like sometimes you don't really need to kind of nickel and dime for that next level down. And so especially for smaller orders, because limit orders are really helpful if you're really moving the price. But if you're a small person, you're not getting a lot of slippage. And so market orders are totally fine for probably under $1,000 purchases, just a simple market order. Limit orders can be good because you can kind of set and forget. But that's only if you do limit orders that are on systems like Matcha or 1inch or CowSwap. I know CowSwap had an issue, but I guess it was related to their treasury, though it wasn't related to the exchange. So maybe those are still fine to use, but those limit orders are good. But if you're too small, you have price needs to go much further below your limit order in order for you to get filled. So for small orders, a simple market buy is just fine. And, maybe that means that you can't just set and forget, but you're probably just fine. For larger players, those limit orders can be more effective because the larger your limit order is, the more likely it is to get filled. Because the way limit orders actually get filled is actually when arbitrage bots, when the prices are right, and then a bot just goes and sweeps your order and includes it in a bundle that the bot actually makes money on. And so the limit order, and usually they make more money on larger trades. And so if you have a really small limit order, you may not get filled, even if price is below your price, your target. So limit orders are better for larger purchases. And then kind of what he described, for scaling out as well. It can prevent immediate pressure on the market, but it still is you're selling. And so whether it's you market selling into and caught pushing the price down, or you preventing the price from going up because you have a limit sell, in effect it's kind of the same thing. It still is releasing new supply on the market, and it needs buyers to absorb it. So limit orders can help maintain some market structure, but you will get a better price than a market order. But there's always a chance it never gets filled. So there's that risk there. And then when he asked about the LP position as a limit order, that's not so much a set and forget thing, because if you put a limit order or you put a liquidity position that acts like a limit order, meaning say you put USDC in the Hex USDC pool somewhere in the 4 cent range, price can go down there and fill your order. But if price goes back up, your Hex that you had bought now converts back into USDC, and it's still sitting there. You made some fees, but you have to actually actively manage that. So that's not really a set and forget type of limit order, which is probably the main benefit. But so that type of limit order requires a little bit more attention. So I think most new users probably don't need to get bogged down into limit orders just yet. Just smashing the market buy is totally fine strategy for new buyers. So probably in conjunction with the DipCatcher algorithm, when that chart's blue, just smash the market buy button. It's that's probably the simplest way to approach it. But then as users get more advanced and maybe they implement more advanced strategies, then limit orders can be useful there.
Well, I think limit orders are really useful. Also, liquidity providing to get into or out a position, really depending on what is your time of the journey. If you're a beginner, probably not, but then later on, you should definitely explore those possibilities. So I already have people talking about Maximus, about the perpetuals, about Poly even. So let's get into that topic now. DipCatcher, can you give us a little elevator pitch of what is Maximus? What does it represent, and why did you develop it?
Yeah. So Maximus is like, so we build these hex stake pools. And so rather than you just staking on your own and having to pay the gas fee for ending stake on your own, you can join these stake pools where people deposited a bunch of hex. All the hex was staked. And then by depositing the hex, it minted you a pool token. So there's Maxi, which is a 15-year hex stake, Deci, which is a 10-year hex stake, Lucky is a 7-year hex stake, Trio is a 3-year, and Base is a 1-year. So we span the whole range of, it's basically like a stake ladder. So from 1, 3, 7, 10, and 15 years. And so a couple months ago, we had these minting periods where you could deposit hex and mint the pool token. And now that the hex is staked. And then in the meantime, the pool tokens are freely traded. So they all have their own market. They all have their own market cycle. And then at the end of the stake, you can go and redeem your pool token for the hex principal plus its yield. So the main reason why I built these stake pools is because the gas fees for ending stakes can be shockingly high during bull markets, because it's not based on the value of your stake, it's based on the days. And so a $1 stake costs the same as $1 million stake to end if they were the same length of stake. So it was probably when one of my first stakes ended, and it was like peak bull market, and it was like a long stake. And I was shocked at the end stake fee. Like, I even bled out some in penalties because I was like, okay, this is too high, I need to wait. And then that kind of led me to figure out why. I was like, okay, the gas price is high, but it's not too high. Like, why is this so much more than just sending? And then I learned that the calculation for calculating how much yield your stake earned, it has to make a calculation for every day of the stake. And then an upgrade in the Ethereum protocol caused this one type of calculation to now be 3 times as expensive with gas. And so there was an upgrade in Ethereum, and part of the upgrade, they had to make this one type of smart contract calculation more expensive. And so suddenly the hex stakes became 3 times as expensive to end. And so that was when it really kind of clicked to me that instead of, everyone staking on their own, perhaps thousands of people should join up together and just stake as a unit. And then, all those, instead of each of those 1,000 people paying the gas to end the stake on their own, only that gas needs to be paid once across all those thousands of users. And so that was the main motivation behind the stake pools, was to keep what we've calculated is it'll probably be about $50 million of gas maintained in the hex economy that would otherwise be extracted by the miners, now the validators. So that was the main purpose, is gas fee savings for the hex economy. But kind of a secondary property that came out because of the way that where you mint your pool tokens, we now have liquid hex stakes that are fungible. So you can, say you put in 1 million hex into the pool, and then maybe you needed some cash, you could sell, 100,000 of your pool tokens. And so unlike, kind of like the HSIs, which is like kind of like another way to do like a tradable hex stake, it still is kind of like an all or nothing thing, because that's an NFT. And so that's kind of where like this made the hex stakes a lot more tradable and a lot more liquid. And that's, created some pretty awesome opportunities for people speculating, because with Maxi, that was the first one. The price of Maxi went from the 1-to-1 mint rate, it got as high as like 2.6. And then the other day, there was a big seller, and it went for 5 minutes or so. It wicked down below the 1-to-1 rate. Now it's back at like 1.2. And so the price on Max, so it's been very volatile throughout the whole time. And then the other the newer pools, like so Deci, Lucky, Trio, and Base, those have hugged more around that 1-to-1 rate. And there's actually currently a pretty significant discount on both Deci and Lucky. So you can basically get 1 hex for 0.8 hex right now with those.
And why it is so great is because those tokens represent hex staked that are then staked for the period of the time that the token is for, right? So it is really coming down to hex. And then when the time of the token comes up, you are able to put it into the smart contract and get hex again. So this is why we all love it so much. And the community here in the chat is already saying, it says on gas, it gives you flexibility. You already mentioned that it also puts a little bit of speculative stickiness onto hex. Then, with all those gas savings of the community, this is then not being sold, right? This is then money that the hexagons have available. This is then long-term also positive for the price. Are there some other benefits that I have not thought about it yet?
Yeah, so some people like the security aspect of it, where you don't have to have all of your hex stake on one wallet. So maybe you have, say you're doing 1 million hex stake, instead of that hex stake being like locked on one wallet, where if that wallet got hacked, you're toast. You could spread it out where, maybe you store like, 20% on a hot wallet, 30% on like a cold wallet stored in one way, and then the remaining like 50% stored in a cold wallet stored in a different way. So like if any one of your wallets got compromised, they can't take all of your money. And so I think some people use it for that use case. That I think is pretty powerful. And then also the being able to being able to just trade it and provide liquidity. Some people earn yield. It's kind of like yield on yield, where you can earn fees by being a market maker, and then so you're earning those fees, which equates to you're earning a little bit more maxi and a little bit more hex over time, as price stays within your range that you're providing liquidity in, and then so you can earn those fees, and then and then at the end you can withdraw the hex at the end. So there's it just being liquid and a token, it unlocks some financial utility in hex.
And then one could argue, well, on go.hex.com, if you make a native stake, it's really locked in. You cannot screw it up anymore and sell too early, right? And now with Maximus and with the perpetuals, you take that out of the equation. You are flexible at all time. But for this, you have built another tool, the diamond hand. So you can actually get Maximus, you can get the perpetuals, and then when the time comes, put it into the diamond hands, right? But obviously the diamond hand for the perpetuals that we know is already run. But Base soon starts again. Trio will come up again, Lucky in the future as well. And then it's the right time to use all of this. And then you have a little bit of a problem with those humongous Ethereum fees, which then you already also solved because you made a smart contract called Poly, right?
Yeah.
And then out of that, it came water. I think this was the Ethereum gas fee problem that you solved there.
Yeah. So that was the ETH that went into the water contract. That was for the bidding function, because Poly was rather than pooling hex, it was an attempt to build a stake pool out of these HSI auctions. There was a part of that system that there was no way to test on testnet, and so it had like this kind of fail-safe mechanism, and then there was something that didn't quite work with the auction component of it. So Poly actually converted into a 15-year Hedron stake, and so it's now one of the largest earners of ICOSA. And so it's kind of like Maxi. Maxi and Poly are quite similar, where Maxi's a 15-year hex stake, and Poly is now a 15-year Hedron stake. And so, which actually it's kind of interesting how there was, that was like one of like an unknown part of like the whole system was how this auction thing would actually work. There was no way to test it on testnet. And so like the fallback option was just to simply stake the remaining hedron if there was any problem with it at all. And so there was, you know, a problem with how the HSIs were processed. And so it just converted to a hedron stake pool. And now it actually so far has yielded higher than the HSIs would have yielded, that it would have got. And so it actually accidentally turned into a higher yielding asset, shockingly. And so who knows what, you know, it's highly dependent on the prices of hedron and ICOSA over time. But, you know, but with that was like a gas fund for the auction bidding. But that principle of like a pooled, like pooling ETH to pay for gas, all of the perpetual pools have something built into that enables that, even though the gas pools for those aren't built yet, just because there's so much time to, you know, those contracts save who ended the stake. So, and I've already written, I haven't deployed any of these contracts, but I've written contracts that allow you to pool ETH, and then whoever ends the stake can draw from that ETH. So it like reimburses anyone who ends the stake. And so if you have some Maxi or you have some Deci, you can deposit ETH into the system, into that gas pool. And just as that gas pool just builds up, maybe it reaches some threshold where someone's willing to end the stake and then get reimbursed by it. And then it's like you can spread that out across everyone. So that poly and water thing, like that was like the first kind of like implementation of a gas pool for a contract. And so something like that can be replicated for the perpetuals. And so you'll probably see one of those for base coming up here in the next couple months once the timing.
Let's go back to Maximus and the perpetuals, because Maximus is a little bit different than the perpetuals, since Maximus also has hedron accumulating every single day. And Hex Hodler is saying, please advise what happening to the minted hedron from Maxi stake. Was it a 10x multiplier?
So it was a 5x multiplier, and it is just accumulating. So, and it's just being hoarded by the Maxi contract until redemption. And then at the end of when Maxi stake ends, each Maxi will be redeemable for its proportional hex. So the hex principal plus the yield. So it'll probably be like 5 or 6 hex. You know, I think you guys estimate it higher. I go a lowball estimate. I think, you know, so probably about 6 hex, and then however many hedron, you know, I'll have to go back and calculate. So the hedron is just equally distributed amongst all the Maxi holders. And that's for Maxi. But for the perpetuals, those are related to the team token, which is kind of like the growth engine for those perpetuals. So team stakers are incentivized to grow these pools. And they're incentivized by, there's like a bonus sharing. So part of the bigger pays better bonus is paid to team stakers, you know, as those stakes end, and then the hedron as well. And so the hedron was chosen to be, you know, used to incentivize the team stakers. One, just, you know, because, you know, to make that team staking a little bit more lucrative. And two, just so, because like the perpetuals, the stakes repeat every time. I would have had to build a whole like accounting system for knowing who got what hedron when, because if you held base in the first period, the amount of hedron per base token would be different than hedron earned in that second period, because the share rate changes. And so there was a lot of complication around actually how to distribute the hedron in a perpetual stake. And so just to simplify the hedron distribution, since I thought that the amount that of hex that team stakers earned, I thought that you know, that fee was quite low. The hedron kind of filled that gap there, and it was just simpler to manage. And so team stakers earn the hedron from the perpetuals, but in Maxi, the Maxi holders get all the hedron. And so what I recommend to people is if they want that hedron, just simply go buy it. Like the amount relative to the like it's such a tiny amount, because those ones got no bonus. And so the amount of hedron compared to the hex, it comes out to like, I think it was like between 1% and 2% of the principal value. And so if you consider the principal plus the earnings, it's like a tiny percent of the total value. And so, you know, why not with some of the money you saved on gas by joining the pool, just go buy some Hedron. So
I think that's a great advice. Well, we are coming to the end of the show. So if you guys have some more questions, put up. It's the last chance to ask these questions. I want to bring up my screen share again because we want to look into the perpetuals. Let's start with Maxi, and we will also switch the price to Hex because this is what we are all interested in. And then when we zoom out, I'm not using trading chart. I'm going with Dex Screener here, but it shows what I want to show. So we have the 1-to-1 mint ratio where everybody was able to put in 1 hex, got 1 maxi out. It ratcheted it up to 2.5x, and now also it fell a lot. In the lowest point, it was minus 65%, and now the prices are going up again because at the end, when you have Maxi, you have Hex, and that's why it's so great. DipCatcher, what would you say about this price chart here? Is it a good opportunity to dollar cost average into Maxi, or is Decky even a little bit better? Because Decky is in discount right now.
Yeah, so there's kind of two ways to look at that. So right now, so far, so Maxi, the stake started around May 1st of 2022. And so we're about nine months in. Right now, the backing value, so the amount of hex that Maxi's earned so far is about 1.2, I think it's 1.24 hex. And so right now, the price is actually almost exactly equivalent to the amount of hex that it has earned to date. And so buying that at that price, it's like a great deal. And as you can see from, before it was a lot higher prior. A lot of that had to do with the team launch, because the team launch and also the Watsa launch actually put a pretty big crunch on the Maxi supply. Something like 25% of the total Maxi supply went either into the Watsa contract or into the team mint contract, which just absorbed a huge amount of the supply. And so all of that kind of combined for making those prices so high at that time. And then by now it's just deep bear market in hex. It's like people sell any format of hex that they have, and so I think that contributed to those prices being kind of going back down near the par value. And it's really kind of that's kind of the $1 million question, right? It's like do you want to buy the Maxi, and what do you think is going to go up faster, Maxi from where it is now or Deci from where it is now? Because it's like but buying the discount on the Deci, it's like you're buying one hex for 0.8 hex. It's like you're buying one pre-staked hex for 0.8 hex.
This is exactly what Hex Hodl is saying here. Why buy Hex and stake for 10 years when you can get 20% off with Decky and no end stake gas? It is also a stake in progress with yield, and the stake that is in progress is a couple of months old, where we had a great T-share price, and you would not be able to get anything like that today anymore. And also the bigger pays better is maxed out, I believe, on Decky as well. Right? So many benefits. Now the question remains, why buy Hex if you can also buy Decky? What do you say to this question?
Yeah, so the only reason I guess you would want to just simply hold liquid Hex is if you have plans on selling that in the next couple of weeks to months, because the pre-staked Hex, they are less liquid market. There it's 1.4 million liquidity compared to how many 10 million plus liquidity on the Hex in the regular Hex market. And so you're sacrificing a little bit of that thick liquidity in exchange for holding it in a form that is earning at I think 30% annually. So it's like you're buying pre-staked Hex, and there's a little bit less liquidity in this market. So that probably be the only reason why you wouldn't. And probably the strongest reason why you would buy instead of buying, say, Deci or Lucky instead of just staking, is you can compare how much you would earn. So say you had 1 million Hex right now, you could either stake that million hex until like the end of the DESI stake. So like a, 9-year and 6-month stake, whatever it is, to, where like if you were to stake until the end of the DESI stake, calculate in your head how much hex are you going to get and how much gas fees are you going to pay. And so that's like the equivalent stake. And then you compare that to if you were to buy DESI at this price and hold it till the end, it's like you're getting 20% more and you're saving on the gas. And so, and you're locked in at a share rate from prior. Whereas like if you were to start a stake now that ended. And so that's probably the best way to directly compare the two is, how much hex are you going to end up with at the end of the stake if you were to buy right now at the current price versus how much hex are you going to end up with if you were to just stake for that same distance starting today and, minus the fees that you pay. So that's probably, what's most, like the best comparison. But probably what I think is really contributing to the discounts is that because Maxi it just ratcheted up in price so fast, a lot of people thought that was just going to simply repeat on DESI especially. And so with Maxi, there was 300 million hex pooled from about 5,000 people. DESI had something like, what is it, like 600 million hex pooled from 2,000 people. And so the average minter of DESI was like 4 times larger than the average Maxi minter. And so I think Maxi attracted more of the stakers, and I think DESI attracted more of the traders. And so it was a very crowded trade, minting your DESI. And there's just so much DESI supply, and everyone who, a lot of people that minted DESI were looking for a quick flip because they saw Maxi do a quick flip. And because everyone thought they were going to get rich because they saw something that happened before and then they thought it was going to just repeat. Since everyone thought that, it's like no one got rich from that. So like there's just, DESI was probably oversubscribed, I would say. And that I think just puts some general downwards pressure. And it's so far away, the redemption's so far away that like there's not like an arbitrage opportunity. Whereas in base, anytime it gets below that level, it's like the redemption's in less than a year. And so the time between, you can buy base at a discount and then redeem it in 9 months, that's much sooner than in, 10 years. So, it kind of gets absorbed a little bit faster.
That's why I bring up here the chart of base. It always toggles around 1. It doesn't go too far off or down around 1 because it is closing up to this redemption phase. And right now it is, we can say it is 1 basically. And we are expecting, right? This is what should happen with Trio as well. As we approach the day of Trio, when Trio is able to redeem, then it should also then come to this point where it has this 1-to-1, or not 1-to-1, but you know what I mean, where it's like the fair value. It's not too much of a premium. It's not at a discount at all when we close up to these dates. Is this correct? And with DESI, this is like just way much longer than it is for base or Trio or Lucky, for example. And this is how I explain for myself why there is this discount right now.
Yeah, exactly. Like, when it's in a relatively short amount of time, it kind of doesn't make sense to either sell at a big discount, and it doesn't make sense to, or if you see that opportunity, it's kind of like a no-brainer. Because like if you're to buy at, like, even if you're buying base at the 1-to-1 rate today, since it's redeemable in 9 months, it's like you got 12 months of yield in 9 months. And so if you're buying right now, your effective APY is higher than like the normal one year, which is about 11 to 12%. It's like you're getting, the same amount of yield in 2/3 of the time or 3/4 of the time. And so, your effective yield is like 15% annualized, because you're getting at 12% over 9 months instead of 12% over 1 year. So that's what makes those ones so attractive. Is it like, base is already, 25% of the way done, whereas DESI is only, I don't know, 0.25 or only 2% of the way done maybe. So it's much more eminent, and so that earning that 12 months of yield in 9 months is very attractive, I think.
It is definitely attractive to everybody who understands T-shares, because if you want to accumulate T-shares, then Maximus and the perpetuals are the way to go. This is one of the tools the hexagons are using in order to accumulate more T-shares than they ever had, and now maybe have a T-share all-time high even in the bear market, especially when there is a discount on the products, on those derivatives. So DipCatcher, thank you so much for coming here today to talk about the DCA algorithm, the first trading algorithm in crypto that actually works. So I think that is really, really great. A big opportunity for the hexagons, to catch those juicy dips, like you are always saying. We had a lot of people here in the chat today, so thanks for you guys. Don't forget to like and subscribe. But DipCatcher, is there maybe something that you want to ask me or the viewers outside there?
Yeah, I mean, what do you think the next bull cycle takes us?
The next bull cycle, I get asked this question a lot, and I just repeat from the last cycle, because my prediction did not get true so far. Right, so far did $7 did not hit yet, so $7 is what I would go for the next bull run. But you guys have to always remember, $7 doesn't matter at all on the way to $100. And where the hex price can go, nobody can ever imagine. We have Richard Hart, right, the best founder in crypto, on our side. We have the God Whale, who is really, really benevolent to hex. So $7 is just a really conservative statement from me in the next bull market, I think. So how about you?
It's so hard to tell. Maybe $1 million.
I like that.
I think realistically, I think we could get it, in the $5 to $10 range.
Yeah, that's exactly what I'm seeing as well. Hexhol is saying $7 between two chains. DipCatcher, let me ask you this: once we have pull chain, one day it will come out. Do you see a binding of the prices on Hex on the pull chain and Hex on the Ethereum chain at any point? Do you think it will ever happen that we have a parity?
I mean, so I think if the largest holders of liquid Hex want that to be, they can, by just making super thick liquidity pools in really tight range on either side. So that's the, so if that's like what ends up, like all the sacrificed Hex, like all the Hex in the Pulse X sacrifice end up dual sided, then that absolutely can happen. Just like, because it'd be very difficult for any, because that's like an overwhelming majority of the total supply. It'd be virtually impossible for it to move materially in one way or the other. And so that, I think, could cause that to be. But there is, considerable risk if you like trying to pin, like, no matter who you are, no matter how much of the supply you own, trying to pin the price somewhere where the natural market doesn't want it to be, you're basically just giving away money. And so, which may be tolerable for, the sacrifice, whoever controls the sacrifice funds, maybe they would tolerate, effectively giving away money in that case to try to, do that. But, and there's other ways that they, in effect, give away money, like holding all that Hex liquid is basically, all the yield that it could be earning. It's just like giving that to all the remaining stakers. So it's like they do kind of have a history of, being the giving tree in that sense. So that would be just like another avenue to be giving money. But I think that the risk there is that by making all of that Hex now available in those liquidity pools, it's effectively like selling the Hex. And so general like Hex circulating supply that's like user owned, that could grow, which traditionally Hex that's gone into the OA or the sacrifices or any related wallets, it like removes that from circulation instead of introducing it to circulation. So that's probably that's why I think that may not fully happen, because it's like, basically putting it out on the market, and then now there's a little bit less control over that circulating supply. So So it's impossible to say, and crazier things have happened. So.
Well, I think if it happens, it will not happen on day one. It will. Richard Hart will probably let the market decide where to go, and then he can still do it. If he does it, he will break the mind of the crypto people, because I think something like this, has never happened before. So people will think it's crazy. But I'm on the same side of you was what you were saying. At the end, it always comes down to just giving away the value. If there is an arbitrage point, people will do it, and then even the OA has limited resources. So I'm really excited to see this grand experiment. But at the end, I believe this parity will never actually be there. I think Richard Hart is a big fan of free markets and let the market decide what the value is for Hex on the Pulse chain or for Hex on the Ethereum chain. So I have to destroy a couple of dreams out there. It would be beautiful to see, though.
Yeah. I feel like I'm right where you are on that.
Well, thank you so much, DipCatcher. It was a really great stream. A lot of people participated, a lot of engagement here. This is how I always have the indicator if the people liked it. So this time, I think they truly, truly did. If you want to learn more about the DipCatcher's DCA trading algorithm, if you want to learn more about Maximus and the perpetuals, all the links are in the video description. And I want to sign off now. Thank you guys for being here. I will now play the outro, and then we are out of here. Thanks, DipCatcher, for being here.
Thank you.
If you could live forever, would you?
Yes.
Okay, we're
Don't
done
even
with the
have to finish the
interview.
sentence.
Yes. No. Okay. Sure. That's an attractive idea, but the way I look at it is the knowledge that I'm going to die that creates the focus that I bring to being alive. The urgency of accomplishment, the need to express love now, not later. If we live forever, why ever even get out of bed in the morning? Because you always have tomorrow. That's not the kind of life I want to lead.
But why don't you fear not being around?
I fear living a life where I could have accomplished something and didn't. That's what I fear. I don't fear death.
You don't fear the unknown.
I love the unknown. I love the. You know what I want on my tombstone? My sister has this in her notes, just in case I can't tell anyone after I die. On my tombstone, a quote from Horace Mann, great educator. Be ashamed to die until you have scored some victory for humanity.